Central Bank Bonanza Week. And yeah, I actually reused that title from before. Hey traders, my name is Blake Morrow with Trading Analytics, and we're going to talk about all the central banks that are meeting next week. We're going to talk about the SpaceX IPO and what do we do after the fact. Plus, there might be a memorandum of understanding this weekend. So I'm going to get to all that and more on the Trading Analytics week ahead video, so stick around. Hey traders, this is Blake with Trading Analytics, and like I said, we're going to talk about all these central banks and what's happening next week. I mean, we have the BOJ, the RBA, the FOMC, the Swiss National Bank, the Riksbank, we have the Norges Central Bank, we have 3 Asian central banks, Indonesia, Philippines, and Taiwan. They're meeting, and I'm probably missed a couple, but all that's happening this next week. And you know, one of the tools in Trading Analytics that you have, not rates. Let's go over here to market info. Let's go to the central bank pricing, interest rate pricing tool. This is something that, you know, my co-host on the Lunch Money Show, he just learned about today that he's like, wait a second, you guys have an interest rate probability, configuring calculator in this tool that is only $36 a month for the premium access, and you still get access to this? And the answer to that is, yeah, we do. And what you'll notice here is if you're talking about the BOJ, you can see right here, it's about an 89% chance of them hiking rates come this week. And you can, you know, read all, you know, the information you want about the BOJ and what's happening and, you know, what expectations are, how they've shifted and everything else. But, you know, there are a lot of central banks that are meeting, and there are central banks that are expected, like the BOJ, to, you know, raise rates. When you see that expectations are a certain way, that doesn't necessarily mean that they are going to raise rates. And if they do raise rates, the yen is going to appreciate in this case. But it's all about future expectations, and that's where this curve starts to come in after the fact. So if you guys want to learn about how this interest rate probability tool and all the other tools that we have in Trading Analytics, you guys are in the right place. Well, not necessarily today, but make sure you're coming to our free shows, and we'll teach you about all the tools that you get in our launch special. $36 a month if you want the premium access, but if you want the scanner, and you want, you know, to scan like 5,000 different, or it's actually 4,700 different instruments every day for new setups, it's actually $54 a month. And that is our launch special that is over after this weekend. All right, so make sure you take advantage of it. Go to Trading Analytics /launch, and that's going to get you to the page where you can actually access Trading Analytics and jump in the chat rooms with myself and other traders and have conversations like this one that I was just having with Mark. Says all these senior officials on the MoU are just rehashing the same crap from earlier. Roll another one out every half an hour, and I'm like, well, I think Monday is going to be epic. Let's let it all set in. The IPO, the MoU, the 100 plus days of straight being closed, et cetera, et cetera. Bids are going to get filled next week, in my opinion. And I'll talk a little bit more about that conversation as we go on to today, or go on to the week ahead video. But like I said, I got a special week ahead video for you. A couple reasons. First of all, it's special because Nick isn't going to be here today. So if you're here for Nick's analysis, you just got me this week. And sorry, Nick had to he traveled out of town to the Carolinas on a week break, so he's not going to be here to film his piece on the week ahead video. But that's all right. If you want to catch his analysis, you can go to Trading Analytics. You can go right over here to where it says stocks, and you can actually click basic technical analysis and read what he has to say about Apple or anything else he normally covers here on the week ahead video. So make sure you check out Trading Analytics for Nick's analysis. But I'm also not going to tell you a whole lot about the trader funding program. The reason why is because our summer sale is going to start next week. So learn about the trader funding program. It's great. It's how you can get funded as a trader, but the sale actually starts next week. You're going to get 30% off instant funding or one-step assessment accounts. You know, I'll be sending out some videos regarding that. So the sale actually starts next week, and it's going to go on through the next week and a half, or 2 weeks, or something like that. I'll get you the end date when I get a chance. But we're going to move over to you know, what's happening today, and we're going to talk about what's happening this next week and when it's happening this next week. So let's get into it. So obviously, SpaceX just IPO'd. One of the conversations, if you go back to our chat room, again, these are, you could, for $36 a month, that's $1.18 a day. $1.18 a day. You can be talking to myself or other traders in our community. We're just talking about, you know, hey, we're going to get SPX is going to, or SpaceX is going to open at 150. And we're like, let's go. And we were just talking about, hey, if we can get to 150, you know, this is going to be a good level to be on the long side of, so about ready to open now, 146.50. And we're talking about, you know, getting long at 150. Well, it ripped. I mean, that was actually its lows, and it ripped higher. Now, that's if you're actually trading it. I wasn't really trading it. I was just saying, hey, you know, near 150, if you know where the floor is, if the IPO price is 135, then, you know that, you know, Goldman and the rest of the brokers that were behind the IPO, they're going to defend those levels. So you kind of manage your risk, right? You know exactly where it's at. But now it's probably going to come off. Now that we minted, you know, Elon Musk is the new trillionaire, first trillionaire on the face of the planet. You know, maybe SpaceX comes off a little bit here. It's going to be an interesting ride, you know, come Monday. Like I said, when you take into account hey, we're going to have a peace agreement at least for the next 60 days. There's a SpaceX IPO. I think a lot of it's going to set in that the Strait of Hormuz has been closed for the last 100 days, and you're going to start to see stocks actually come under pressure. It's going to be the buy the rumor, sell the news. We talked about that last week, and I want to just go into the S&P really quick while I'm referencing that, because in the S&P right now we were looking for a bounce. Remember on last Friday, I said, hey, we're looking for a bounce. And then for a failure, well, guess what? We bounced and we failed, and then now we're bouncing again. And I'm going to just say that while we're below 7,500, I think those are levels that you need to look at for a possible short. Now, remember, at the end of this video, I will talk about my 3 top trade setups of the week, but I'm also going to review the top 3 trade setups of last week. So don't go anywhere. All right. Well, you should make sure you're here for that. That's what don't go anywhere until you see that. Don't go. Yeah. Anyway, we'll see you there. No, don't go anywhere though, because I still got other stuff to cover. All right. So what's such a big deal about the S&P where we're at right now? I'm going to go to this chart because you guys have seen this chart for a long time, right? I've had this chart on the week ahead video for a long time. You can see that big major channel that we're in, that we've been in since 2018, 2017. Well, guess where we stopped today? Or this week. We stopped exactly where we were supposed to. All right. So this here, if you're looking at the S&P right here, and I also want you to look at this, low to high, right? Okay. So if we break back below the 50 DMA, or you break back below this week's lows, it should bring in a false breakout of this channel. Some of you might call it a throwover. It's just a false breakout. You know, false breakout tends to lead to a breakdown. Most of you have heard me say that at least a bazillion times over the last, 20 years. But, false breakouts tend to be pretty big reversals. Some people call them throwovers. Some people call them slingshot trades. Hey, whatever you want to call it, it's a false breakout, right? Tomato, whatever. Anyway, so when or if we break the 50 DMA in the S&P, that is going to be a pretty bearish event in the S&P. So I'll be watching next week, because I think now that we're past all this stuff, we might get, people selling in May, go away, or selling on June 15th, and going away. So that, I think, is entirely possible going into next week. Now, like I said, there's a lot of other things that are happening this next week, so I'm going to just cover a few major topics. So if there's a peace agreement, one of the things that you've probably heard me say multiple times is that if there is a peace agreement, you probably want to start looking at buying yen. And the reason why you want to be buying yen is because now that the Strait of Hormuz is opening, let's say, because I think part of the agreement is supposed to be that they're opening for the next 30 days. It should be open to full capacity within the next 30 days, and Iran's supposedly going to agree to this. Well, you know, Japan's had really a tough time getting all the energy they've needed. That's one of the reasons why the yen is sold off. But now that the strait is reopening, they're going to get that relief that they need. They're going to start to get that energy. But you know what? The BOJ is probably going to have to raise rates. The reason why is because inflationary pressures are going to be mounting over the next 6 months to 12 months. A lot of the rice that's been planted, they haven't had all the right fertilizers that they've needed. So what's probably going to happen is they're going to have a short season for rice, and they're not going to grow as much rice as needed. Therefore, prices are going to be higher. They're going to have to import more. And that means the BOJ is just going to have to raise rates a little bit more aggressively in the months ahead. So that's why I think if you want to play the reopening trade in the FX market, buying yen might be the place to do it. All right. And remember, we do have the BOJ actually on Tuesday night, which will be Monday night, which will be Tuesday morning, in Japan. Also, alongside them is going to be the RBA. So if you take a look at the Australian dollar has given us that head and shoulder pattern that we've been waiting for the last 2 weeks, which it is rolled over. Now, one of the things about the Aussie dollar is you'll see right here, previous support which is the neckline, right? Previous support is the current resistance, which also happens to coincide with a 38% retracement or 50% retracement. So these levels right here, this is like the sell zone for the Aussie. And if the Aussie does indeed roll over here, if the RBA, let's go back over to our interest rate, our tool, interest rate pricing tool here, and you pull up the RBA really quick, you'll notice that on the RBA, there's a 2% chance that they're going to hike. There's a 97% chance they're going to keep rates on hold. And if you want to read all about it, you can just read all about it. But with that being said, the risk right now for the Aussie dollar is that we are going to end up stalling here. And if risk does turn over, that means that we're probably going to head back down here. Now, the head and shoulder pattern, just so you guys know, most of you do know this because you listen to our shows every day. You are very well aware of this. Or if you use trading analytics and you go over to FX and you pull up the Aussie dollar, you've seen this chart multiple times over the course of the last week, and you can see that we point towards 69 cents. So to do that work for you here on the show, if you're not a subscriber, for $1.18 a day with trading analytics, and to get all those really cool tools and be in chat rooms and all that stuff, you would know that, maybe there's the target. The target's 69 cents. So that's where I think eventually the Aussie dollar is going to go. Now we do have UK CPI, but we have UK GDP, but we also have the MPC that's meeting. Did I not even mention the MPC? Yeah, the MPC is meeting next week. The ECB met last week or this week. It's this week that I'm filming, but last week as you're watching this. But we have the FOMC, the Bank of England. So if you look, and by the way, there's GDP data coming out of the UK as well. One of the things about sterling, and I'm just going to leave you with this, a way I'm looking at it, and let's just pull up trading analytics so you guys can see how I'm looking at it. If you look at sterling this way, I'm looking at it as a wedge. You can see consistent lows at 133 right there, and lower highs right there. And that's 134.50 or 134.40 right there. That's resistance. That's a wedge that's coming into play ahead of the Bank of England this week. So just keep an eye on that wedge, because obviously if you're looking at a wedge, breakout above the highs would be that the wedge resistance would be bullish. This would be bearish. This would take you back down to that level. That's all doable with the sterling going into next week. Also, we have the Fed. So let's go take a look at the dollar. And one of the things I want to point out about the dollar index, and this is one of those charts that I don't redraw. I don't just leave it for this week ad video, because this dollar index is the chart that I use when I'm doing analysis on trading analytics every single day. You can just go over to the dollar index here. Let me find it for you. There it is. And you want to see the chart that I'm looking at every day. It looks just like that. We got we have a bull flag pattern that's developed, and you have to be respectful while you're above this level here. That is the previous resistance that should act as support. It's also the 50% retracement. That means that as long as the dollar is above that, we're probably going to fill that bull flag pattern that takes us to 100.70. And that's with the Fed. Now, you have to think about the Fed. I should probably talk a little bit about, the Fed and expectations, because when you're talking about the Fed and you're talking about rates, we're talking about a new Fed governor. We have the Fed chair, new Fed chair, Warsh. He is expected to leave rates unchanged. Obviously, you can just see that the Fed is expected to leave rates unchanged. 1% chance that there's a cut. But the thing is we've had a really strong jobs report. We've also had not only a strong jobs report. Inflation that came out this week wasn't benign by any stretch of the means. Some of you might say, well, it came in a little bit below expectations, but it's well over 2% on almost every metric that you look at. So PCE is going to be strong. So how do you get a Fed governor that's going to buck the trend get the rest of the board of governors to agree with him that cutting rates is a good idea when the economy is running as hot as it is? That's why rates are going to end up staying on hold. But the question will be this week, will Fed Chair Warsh, will he actually even sound a little bit more hawkish? Now, that's obviously going to piss off Donald Trump, as you all could imagine, because he put him in there to actually cut rates. So he may have to bite the bullet and be more hawkish because of the data that we've been seeing. And if that is truly the case, the dollar will respond appropriately, and we will see a very strong dollar market. Now, if he comes out swinging as a dove, there's a good chance that the dollar might pull back a little bit. Maybe we come back and see this 200 DMA somewhere down there. That's entirely possible. But again, the market's going to look at that and say, yeah, I know you're dovish, but we already see what all the other Fed governors are saying and how they're voting, and we already know that they aren't going to be buying your argument. So even if he is a little bit more dovish, maybe more dovish than expected, any dollar setback should be temporary. How about that? All right, now that is going to be on Thursday. Yes, on Thursday. No, on Wednesday. And on Thursday, we have the Swiss National Bank, which is the last central bank I really wanted to talk about, just because there's this huge vote in Switzerland over the weekend. I was talking to our colleague K-Man, and he mentioned it. He mentioned it at the end of last week, and I listened to him and I asked him about it. And he's like, "Oh yeah, it's this big vote." And then I'm like, shoot, I started texting all my other currency guys, and they're like, yeah, we've been focused on that the last couple of weeks as well. And what's really interesting about all of this is that the Swiss franc is actually shown us a lot of weakness despite the market getting risk averse. So whenever the market gets risk averse, the Swiss franc actually has shown weakness, which is not the case and has not been the case for the last 20 years. So as a result of this, you got to watch the dollar Swiss, because if the dollar Swiss breaks out, it's going to be a pretty massive move, in my opinion. We're going to see a move above 80.50, should probably carry us through towards 82 cents over time. So just watch the Swiss National Bank, especially they're expected to keep rates unchanged. But following this weekend's vote, here's the Swiss National Bank here. They're expected 99.3% chance to keep rates unchanged. But the risk might be that we get a break to the upside if they just sound a little bit more dovish following the vote that happens this weekend. So keep an eye on that. All right, guys and gals, like I said, I'm not going to talk about the trader funding program today. And the reason why I'm not going to talk about the trader funding program today is because, you know, we are going to have a sale. And I would rather you guys and gals just kind of wait for our sale coming out next week, but it's going to be our summer sale, and you're going to get 30% off instant funding programs. You know, if you just need capital really quick because of this volatility, you want to take advantage of it, or if you want to get, you know, take a one-step assessment, it's a little it's a more inexpensive way. It's an inexpensive way to get involved with your funding. You just have to pass a real simple assessment. You have to make 10%, not lose more than 6%. You know, on a high watermark basis. That means as you're making money, you can't lose more than 6% of that. And you have to do that with unlimited amount of time. Real simple process. If you do that, then you get funded. But you can get 30% off. And we haven't done a sale in months. So take advantage of the summer sale. It's coming out next week. So I don't, you know, bore you with the video and all that other stuff. All right, let's go into some of the other markets that I wanted to cover. So we talked about the S&P. I do want to talk about gold because you guys know with gold, we were talking, well, I drew a lot. Well, I drew last week, okay, let me get rid of myself here. I drew a mess last week, right? That's all this green stuff. I'm like, hey, here's the, you know, this is a Gartley pattern turned into a butterfly. We're going to break down because we're below the 200 DMA. Remember, we talked all about it. Broke below the 200 DMA. We're going to look for a move down to eventually down to 3,900. Well, let me delete that really quick and I'll put it right back on as soon as we're done. You can see we dipped to 4,000. We bounced, but one of the things that you might not notice here, and I'm going to show you this really quick, we can't even get back above previous support levels. If you can't get back above a previous support level, that means that the trend is very well entrenched, bearish trend. So if you guys are bullish gold, be really careful because at this point in time, it does look like we are still going to, you know, challenge the 4,000 level, even though we came really close. It seems like we're going to challenge the 4,000 level eventually. So I'll just keep that drawing there. Now, if you look at silver, I want to show you how we can get to the $55 level. Well, here is that range, right? And by the way, I should redraw this. Let's go ahead and redraw this, shall we? Well, actually, you know what? Was a Gartley pattern and a reversal. That was a big reversal, much bigger than I thought it would be. But notice how silver is backed up to the 200 DMA. Well, if you want to know how silver can get back to, you know, channel support, it would be probably looking something like this. So channel support would be about the mid 50s. Let's call it 55 bucks, right? That was a massive breakout point. So if we get down there, the look at silver, that's going to be the level to be on the long side of silver. And by the way, this is, if I'm not mistaken, oh, I think I am mistaken. Let me do it this way. No, it's 161% extension. I thought it was a little further than that, but it's not. So 161% extension comes in at 58 bucks, $59. Maybe that'll suffice. I don't know. We'll see in the event we get down there. I think somewhere down in this level is going to be the level to be on the long side. Again, it's a big breakout point of lifetime breakout point above 50 bucks. So if we can see those levels again, I think that'd be great. I want to cover, you guys heard me talk about crude oil. Crude oil finally broke. Do you guys know where we're getting long? Do you remember? Well, I'll talk about that later today. So don't go anywhere regarding crude oil. If you missed it last week, don't worry. I got you back. Here's Bitcoin. Bitcoin also extremely heavy. Remember we talked about it, a bouncing ball. Do you guys remember that conversation yesterday or last week when I took this little ball and I'm like, yeah, it's a bouncing ball, like a bounce, 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 right? Remember that conversation? That's why I drew it out in green. Bitcoin still looks really heavy. We can't even get back above 65,000. That is not good. If you're sitting there watching the SpaceX IPO and you watch the stock market bounce aggressively and the Bitcoin market can't even get back above 65,000, that is not a good sign for Bitcoin. So does Bitcoin look like we are dropping eventually to 52,000 and maybe all the way down to 20,000? It does still. Nothing's changed. So be careful of Bitcoin. Also, take a look at yields. Yields are still really strong. Now we've finally found some support this week. Yeah, just keep an eye on yields. They finished that head and shoulder pattern, but yields aren't backing away. And if yields aren't going to back away, and they're not pulling back, and stocks are near all-time highs, then there's a much better chance at this point in time that yields go up, especially once they get past the idea that, wait a second, okay, war's over, great. Is it inflationary? Yes. Did it cost a lot of money? Yep. All right, where do yields have to go? Up. Up. Yeah. And then we're going to see probably yields not only in the 10-year, but on the 30-year, maybe in boons and JGBs and whatever else might start to go up again, following this next week. That's why this next week's going to be a really important week in the markets, in my opinion. All right, I covered most of the major market. Oh, one last thing I want to cover. I do want to talk about copper. I just had Tracy on, from Ninja Trader Live. She was a guest on our new show, which is the Lunch Money Show with Chris Pulver. She was on Wednesday. She is really a copper bull. I agree with her as long as that 38% retracement holds in copper. This one right here. You can see it, right? Because if that breaks, that means we get a range extension. And the range extension will be, something that looks like this, like a move to the 200 DMA. So copper is holding up, but so are stocks. So if stocks turn lower, copper will probably turn lower as well. All right, guys and gals. So from this point forward, so what I want to do is I want to go into, I want to talk about, what's happening this next week, or excuse me, what we're looking for as far as trades this next week. But I also want to review the trades of last week. So if you guys are ready to do that, let's get into it. So last week, the first trade was long Bitcoin at 52,000. So we talked about Bitcoin. We talked about it dropping to 52,000 and it getting there, but it hasn't yet. But do you think that trade's off the table? No, that trade's very much alive. So even though this trade didn't work out, or didn't happen, that means you didn't lose money, you didn't make money. We call it a scratch because you plan the trade your plan. Well, we planned the trade and we couldn't trade the plan because it didn't get to 52,000. So Bitcoin, scratch. Trade number one. Trade number two, sell the S&P rally to 7,500, target 7,200. That didn't happen either because we only got as high as 74.40. 74. Wait, is this Monday? Tuesday. Oh, yeah, Tuesday the night. Well, the high was 74.82. So, some of you might say, well, that was 20 pips away. You said if it got to 7,500, it didn't quite get there, right? But some of you might have actually traded it. I just actually want to see 7,500 print. So I'm going to call it a scratch, but admittedly, that was pretty damn close, right? So, you can call it whatever you want. I'm going to call it a scratch. But some of you might have said, well, I made money on it. Well, that's great. All right. So the next setup, so we got two scratches. The next setup is sell gold below 4,000, target short gold while below 4,000 or 4,400, target 4,100, which we did, and then 3,900. Okay, so trade setup number two, sold gold while below 4,400, and this is Friday, this is Monday, so you sold it while below 4,400, you target 4,100, it hit, and then 3,900. So the second leg of it hasn't hit, but did that trade work from last week? Absolutely it did. So we had two scratches. One of them was really within 20 points. Yeah, no. All right, two scratches and one trade worked exceptionally well. And you probably could have said, two of them worked. But anyway, that's neither here nor there. That is what we talked about. So what are the 3 trade setups of this week? Well, the first trade setup of this week is going to be the Aussie dollar. So if you get to short the Aussie dollar at 70.80 ahead of the RBA, I'm looking for a rejection of the head and shoulder pattern and a reversal lower. So that would be trade setup number 1. So if you can sell it as close to 70.80 as possible, that is going to be trade setup number 1. And by the way, I'm already short Aussie dollars. And if you want to know how I've managed it all week, you can just go over to, here's our chat room. You can go over to the trades room and you can see where I'm currently short, which you'll see right here. Oh no, I shorted the sterling there, but you can see, sold the euro there. But you can actually go through and see how I actually managed. Just go to the threads. You can see how I managed the Aussie dollar trade and my euro Aussie. Here's my current Aussie trade. But if you want to know how I managed my last Aussie trade, it would be right here. No, not there. Sorry, I keep going to the same thing. Let me scroll back. You want to know how I managed my last Aussie trade right here, right? So you can find all that in the trades room. So, if you only get me once a week, well, for $36 or $1.18 a month or a day, $1.18 a day, you can come into the trades room and you can see exactly what I'm doing rather than wait for the week ahead video. $1. Okay, so that's trade setup number 1. You get a short off on the Aussie dollar as close to 70, 80 as possible. I think that's going to be a great trade. All right, trade setup number 2. Now, I think the S&P is such a big deal here. Yeah, if you can sell it at 7,500, that would be great. However, I believe that a move below 72, whatever that is, 72.40 or 72.30, below there is going to open up a lot of downside to the market. So I don't even care about chasing at that point in time. So, and I don't like to chase. But in this case, under these circumstances, under everything that I've explained to you today, that seems like entirely possible if we break through 7,200. Because really, your risk is manageable. Because if you short a breakdown and then it just comes right back up above 7,300, you know where your risk is. So it's very manageable, especially when you are looking at risk versus reward, and where the S&P could go over the next few months towards channel support, which we talked about over here, right? So that's trade setup number 2. Trade setup number 3 is in the currency market, the dollar Swiss. If the dollar Swiss breaks above 80.45, I am looking for a long in the dollar Swiss to go towards 82 cents. Now, if you guys don't know a lot about the population raise and how we feel about that, just tune into the Flow Show. Ask Ryan and K-Man about it. They've been talking about it for the last week or so. So talk to them about it on the Flow Show, or you could ask me on the Face Show. But a break above 80.45 or 80.50 is going to be extremely bullish for the dollar Swiss. Guys and gals, if you've enjoyed this video and you like being these types of videos help you prepare for the week ahead, make sure you give me a thumbs up. Thank our team down below for getting this video out. And I hope you guys are enjoying Trading Analytics. I hope you're enjoying the community. And I want to thank you all for being with us today. I know this is your weekend, and I'm filming on a Friday, but you're probably watching this on a Saturday or Sunday. I thank you for spending your personal time with me. It's really important to me. It's really how should I say, meaningful to me that you spend your own personal time watching this video all the way to this point. So I do thank you. All right, guys and gals, I'll see you on the Monday morning Face Show. And don't forget our Lunch Money Show. It broadcasts every single day, Monday through Friday at 12:30 p.m. Eastern. It's a public show. Myself and Chris Pulver, we talk a lot about what's happening in the equity markets, what's happening in options, how you can take advantage of that with Chris. So you guys have a great day and a great remainder of your weekend. I will see you on Monday. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos,
share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.